Today on Finance at 5, markets are up with the US staggering jobs report coming out. Is the oil price war ending? Trump thinks it might be. Cenovus and Walgreens have also got some good news today. Starting off, the S&P 500 was up 2.28% on the day. The sector that really drove this gain was the energy sector, which was up 8%. The losers were the consumer discretionary sector and real estate, both slightly falling. The Dow was up 2.24% on the day, making it a week loss of 5%. The Nasdaq was up 1.72%, making it a week loss of 4%. In the Canadian markets, the S&P/TSX Composite was up 1.8% on the day, making a week loss of 2%. The sectors that performed really well were the energy sector as well as material sectors. On the other hand, the consumer discretionary sector and the information sector really took a hit. In Europe, the FTSE was up 0.5%. In Asia, the Nikkei was down 1.37%. Oil had a strong day with WTI up over 21%. Brent was also up over 20%. Gold also performed strongly with a 3% gain on the day, but over the past 5 days, it is still slightly down. In the Treasury markets, the US 3-month T-bill dropped to 10 basis points today from that 20 basis points yesterday. Pretty big drop over the day. The 10-year US Treasury is holding at 61 basis points, and the Canadian 10-year is at 65 basis points. In the currency markets, the British pound, the Chinese yuan, and the Canadian dollar all had strong days. On the other side, the euro and the Japanese yen struggled on the day. U.S. jobless claims came out today with a staggering amount of 6.65 million claims. That's up from last week's record of 3.3 million. This is really bad news for the United States, as one analyst, Thomas Kosterig, says that it's not unthinkable for the unemployment to reach 20%, which would be significantly detrimental to the United States economy in the long run. I saw some other people saying today also that it could be around 10% currently with the amount of people applying for jobless claims. In total, the insured unemployment rate rose to 2.1%, up from 1.2% previously. The areas that are hit hardest are retail, restaurants, and travel, but basically every industry is having a tough go at it. I mean, 6.5 million jobs lost. That's pretty staggering for 1 week. The US trade deficit numbers came out for February with a pretty significant drop. In total, the deficit was 39.9 billion, which is the lowest since September 2016. Exports fell a total of 0.4% and imports fell a total of 2.5%. China was a big driver in this as they saw a large shut down their economy in February. As you can see, the goods gap with China fell 17% as they had a 13% drop of imports. Canada's trade deficit also narrowed in February with a total deficit of 983 million. This is a pretty significant decrease from January's 1.7 billion. It was also expected not to decrease and to be at a deficit of 1.87 billion. So it's a pretty big drop there in Canada. In total, exports rose 0.5%, while imports fell 0.8%. It was also heavily affected by the Chinese shutdown as well, as exports to China fell 6.4% and imports from China fell 6.8%, which is pretty low level and pretty big drop in 1 month. The oil price war may be actually coming to an end, as President Donald Trump has announced that he's made a tentative deal with Saudi Arabia and Russia to end the oil price war. He says that they're planning on cutting production by 10 million barrels. It hasn't said whether that's barrels per day, so it's kind of up in the air exactly what that means. Because, for example, that's a lot of oil, and that would actually reduce the production by 45% from those nations. So unlikely to be barrels per oil a day, so hard exactly to say there. But also one of the Putin spokesmen said that Putin hasn't spoken to the prince. So a little confusion there as well. And it seems kind of unsure exactly what's going forward, but hopefully some good news. The oil markets are really liking this as crude oil futures in New York City were up 35% after the news. WTI also was up 27%, close to when the news happened. There's also a lot also going on with China, who's stockpiling oil now as they see an opportunity as they bring in most of their oil that the country uses, that they plan to increase their reserves there, trying to buy it up cheap basically. With record numbers of U.S. jobless claims being filed and increasing unemployment rates, it should be no surprise to you that consumer comfort and confidence in America is on the decline. The Bloomberg Consumer Comfort Index fell down 3.4 points in the week ending March 29th, down to 56.3. While it doesn't sound that bad, this is actually the biggest 2-week slide in records dating back to 1985, which fell 3.3 the previous week. Overall, it's really not a good look for consumer confidence in the United States, as many people are really going to have to start saving their money and not really spending it for fears of layoffs, as well as other people not having money because of layoffs. In company news, Walgreens released their earnings with comparable sales in the US up 26%. Their pharmacy sales were up 5.3%, as many people have been going to the pharmacy and buying up supplies needed for the current pandemic. Their earnings per share, or adjusted earnings per share, were $1.52, down from $1.64, but beating earnings expectations of $1.46. Like many other companies, it is really hard for them to know what's going on to happen in future, and much of their guidance in the future really is unclear as they're projecting a flat growth previously, but due to COVID-19, this is relatively uncertain. The market didn't take too kindly to this performance though, as Walgreens is currently down 6.5%, pretty significant when you consider the markets are up on the day. In the energy market, Cenovus Energy has announced that it is suspending its monthly dividend. This isn't a surprise given the current state of things in oil prices, but they've also announced that they plan on cutting capital spending again by 150 million. This is in addition to the 450 million reduction that was previously announced. In total, they expect um, capex to be within 750 to 850 million for the 2020 year. They're also planning on reducing salaries from every level.